S&P 500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hey everybody, Jake here with TrendSpider to go over another video in the technical analysis series. Today we're going to be going over the Williams percent range, and honestly, this is one of my favorite indicators to use when it's used right. It can definitely give some pretty strong false signals. That's why it's really best to use it with another oscillator like the RSI. To start with, the percent range is an oscillator between 0 and negative 100. If you're looking at the percent range, you're probably thinking this kind of looks like the RSI. Well, this is actually the overbought signal is greater than negative 20, and then the oversold signal is less than negative 80. So a little different than the RSI, but still looks pretty similar. And this looks at the relationship between the last closing price and the high and low of the past X amount of days you're looking at. So in this case, we're looking at the Williams percent range 10. That means we're looking back 10 days and looking at the high and the low of those last 10 days and the current relationship between that, the last close that we've seen. The formula, if you guys want to get into the mathematical side of this, is the highest high over X amount of days. And as I mentioned, X is just this length here. In this case, I have 10. The default is going to be 14. I don't really like using a 14 period anything because, you know, what's 14 days? I mean, that's 2 trading weeks and 4 trading days. So each trading week has 5 days. So you're looking at 5, 5, and then 4. So it's just kind of a random number. I like to look at the 10 on the daily, especially because you're looking at the last 2 weeks of trading. With the weekly, you can use the 8, which would essentially be the last 2 months. So I like to look at it in that sense. So for the daily, definitely using the 10 is what I like to use best. And the best use cases for this is really finding divergence and then gauging momentum after the move and when the move is currently happening. So you'll see here a lot of the time, the Williams percent range will hang out way above negative 20, which is technically overbought. And then it will hang around below negative 80 for quite some time, which is technically oversold. So just because this becomes overbought and oversold does not mean that it's going to bounce in either direction. This is where you really want to use an RSI. I like to use the RSI 10 because the percent range is kind of an ultra sensitive RSI, and then the RSI paired with this, you can really find some interesting signals, especially when you're looking for divergence. So in this case, you'll see here that we have the RSI on top. We're looking at the RSI 10. We're looking at the Williams percent range 10. And you'll notice here that the RSI 10 is not finding any divergence. It's not signaling any divergence. It's just becoming oversold. So what I like to do is I like to look for essentially when the RSI is oversold and then the percent range is showing some type of divergence. So notice here that on top of the divergence, as I mentioned, it will show momentum and just overall strength of trend before the RSI. Notice here on the Williams percent range, we became oversold on October 15th. And notice that this was way up here before we bottomed, and you'll notice that the RSI was not at a bottom yet. It was at 38. Anything below 30 on the RSI is really something to keep in mind. But you'll see here that the percent range actually became oversold much quicker. So a lot of the time, this will gauge the strength of the trend. If this really goes below negative 80 quickly, you know that we're definitely in more of a downtrend. And if the RSI is still above negative 30, there's probably still some more room to move down. So notice here, you'll see that the RSI finally closes below 30 and hangs out there for a couple days in October of 2020. And you'll notice as that oversold RSI is happening, you'll see that the percent range is showing this divergence. So these higher lows on the percent range and then the RSI being oversold was kind of your signal for a potential bottom. Now notice the same thing here where the percent range starts to really spike up quickly and becomes overbought for quite some time, but you'll see that the RSI does not become overbought pretty much above 70 until we get into early to mid-December. And then finally, our signal here was essentially this divergence on the RSI. So being able to use both of these indicators together can really give you a better gauge of what's going on rather than just using one or the other. you'll see here again that the RSI starts to break down here in late December, but you'll see that the percent range has already started to break down below this oversold of -80. So once again, this is signaling that trend change and that momentum to the downside a lot quicker than the RSI is. And so notice that the RSI still continues to move down until we get almost right to 30. And then the percent range starts to show positive divergence. You'll see here that this point here is -100. This point here is -98.98. So it's not even visible divergence. It's more mathematical divergence. And you really have to look at those actual values to see that this is divergence. But you'll notice here, same thing, divergence occurs. You've got the RSI oversold or very close to it. And that was the mark of your bottom. Same thing here. Once again, as I mentioned, the percent range starts to break down through -80 almost immediately when this trend changes. And we go from around 107 on Fastly all the way down to 60. And you'll see here that the RSI doesn't even start to get oversold until we're 5 or 6 days after the percent range. So you really want to use the percent range to gauge when these trends are changing and when that momentum is really going to the upside or the downside. And it's just a great way to see, how this is playing out, and using both of these indicators can really give you an edge. Same thing, RSI is oversold. You can see here that the divergence starts to show up here on the percent range, and then we finally start moving up. And you'll see here how much quicker the percent range moves up than the RSI. But you'll notice here that the RSI does start to hit some resistance here. So the resistance being the 50 mark here on the RSI, and then the percent range pretty much showing here that we were overbought. So there are going to be times where the percent range becoming overbought pretty quickly can be a signal of a top. And the beautiful thing about indicators is you're never going to be able to use one perfectly. Each stock has its own personality. So the Williams percent range and the RSI 10 may work really well on Fastly, as you can see here, a couple different signals over the last year or so, or half a year. But if you go to something else, you may have to optimize this length a little bit. So the way I like to use the length of time is really just a function of whatever time frame you're in. So in this case, you'll see here that, with the 10 is something that really highlights this signal very well on Fastly. But with other stocks having their own personality, you may not find this signal on a different stock. So you definitely want to use the different signals and the different lengths of time, kind of catered to each stock. But generally, the default I like to use is the 10 for the daily, and then on the weekly, I like to use the 8 because let's say it's a 2-month look back. So there's obviously 4 weeks in a month, and then times 2, that'd be looking back 2 months. But as I mentioned, you may find a length of time that works perfectly on one stock, and then it just may not show anything. So a lot of this is optimizing and finding these signals on your own and using some of that discretionary analysis. So all in all, this is a really great thing to use. You can use the market scanner and the strategy tester to test this out. Maybe you want to see how the relationship is between, let's say, the MACD, RSI, and the percent range. You can go in and use the strategy tester, enter your entry conditions, add your exit conditions, and then from there you're able to really get a better grasp on if this signal is something that works for you, or if it even beats buy and hold. A lot of the time you'll find on the strategy tester, your strategy may not beat buy and hold. So what's the point of even trading that strategy if it has no edge in the market versus just buying and holding something? It's a lot less stressful to just buy and hold something over time. So this really gives you an edge in finding out if that strategy you're looking at is worth even going after and trying out. So this is the strategy tester. You can also use the market scanner. You just go in, add your parameter. Maybe you want to see your parameter is the daily indicator, Williams percent 10, crossed up through the constant level of -50, and you want to search for stocks that have this particular setup. There's a lot of different ways you can use the percent range on the platform, especially with that scanner and that strategy tester. If you have any questions at all about using TrendSpider or the platform or anything about the percent range, make sure to comment in the comment section below. And we do have that 7-day free trial, as I mentioned, so you don't have to just jump in and use the scanner in the market strategy tester. By buying the platform, you can actually test it out first. Thanks so much for watching, and have a great day.